What's up, YouTube? Living with Less is hitting you guys with another finance video today. There's been so much talk about GameStop, so let's take a look to see how it's affected our portfolio. All right, and that's weird. GameStop's not in here.
We're going to show you why we don't care about GameStop and how we still make money without it in our portfolio.
Thank you guys so much for tuning in to another video with Living with Less. If this is your first time here, we're a channel all about how to save the planet and your wallet. And today we're focusing on your wallet, specifically your portfolio. So let's get into GameStop a bit. So right here we have pulled up their stock and it's absolutely insane.
Absolutely bonkers.
Today, Groundhog's Day, February 2nd, they are down 60%. Okay, that's huge. Being down 60% no matter your valuation, that's a huge loss. But, I mean, a month ago, nobody knew GameStop was even on the radar. So what happened?
So what happened was, if you haven't heard the news, all this craziness that happened last week was there's basically a community of people on Reddit, and there's a subreddit called r/Wall Street Bets. And it was basically a community of people that joined together, and it really just demonstrated how powerful social media is. And they took advantage of like the big hedge fund firms that usually take advantage of the little guys. So basically what they did is pooled together and just all decided that they were going to buy a stock while the big hedge funds were shorting a stock. Not important what that is right now, but basically they took advantage of the big guy and they drove the stock so far up that it just went like crazy. Hit all the news. If you haven't seen it, I'm sure you have at this point. But that's how it got to the peak, and now it's coming back down. It's just a huge roller coaster up and down. So while you might be able to make a little bit of money in something like GameStop in the short term, you might even make a lot of money. This is not something we look into, just to drive the point home that we're really looking into stocks that build long-term value, something that we can hold in 10, 20, even 30 years. So if you look at something like GameStop, obviously it's not something that you would have even wanted to hold on to like over the past month. Like if you invested a month ago, sure, but over the past week it's down like 50% or something. So that's why we're not looking into these short-term trends like this. But as a special time on this channel, we will be going into our portfolio, showing you what types of stocks we invest in that does not include GameStop and what kinds of returns these companies give us. So now we're going to jump in here and show you guys the numbers, why we get so much more excited about things like dividends than things like GameStop. So we're going to go into our sheet here. This is where I track all of our personal finances. A bunch of different tabs here. They're not important, but a few things that I want to point out. In 2020, overall, we made almost $1,400 in dividends. So while this isn't like a crazy amount of money, like you're going to retire on it, like you can live off of it forever, it is something that's a consistent revenue stream that is only building up year after year. Exactly.
I mean, this is key to our FIRE journey. This is our key to our financial independence, retire early.
So just another thing to demonstrate this is year over year performance. So this is just closing out, it's February, it's Groundhog's Day, February 2nd, so just closing out January. So January of this year, we made $158. So again, not a crazy amount of money, but to compare it to last year, January 2020, we only made $32. So a year-over-year performance, that's a 380% growth rate, which is really cool to see because that only continues to grow over time.
I mean, yeah, guys, like think about it. Like in 1 month of dividends, even though we're reinvesting these dividends, I mean, that could cover your grocery bill for a month. That could probably cover your Netflix, Hulu, Amazon Prime, like whatever subscriptions you guys have. But let alone think of dividends as a business. If you're going to be investing in a business, look for a business that gives you over 300% year-over-year growth. I mean, if I'm Mark Cuban, I am throwing my money at the Shark Tank to get into this business.
So $158 in a month. Like Gabby said, like, so it can cover something like our grocery bill right now. But imagine if we continue to do this for 5-10 years. Like, imagine how many groceries we can buy. It's gonna be awesome. But seriously, it's gonna be able to cover way more expenses for us and get to the point where we can retire early. Not necessarily sit back and do nothing, but point being is that we'll have the financial independence to do what kind of work we enjoy.
So this is why we continue to pour our money into dividend growth investing. It's not the highest return like Gamestop is in the short term, but it's consistent enough that we can rely on it. And the growth and the compounding like interest of dividends and reinvesting that, guys, I mean, this is key if you're really looking for a FIRE investment strategy. But, I mean, if you guys are interested in more of our investing strategies, we'll put a card up here on how we pick our stocks and as well as our own personal FIRE journey and our overview of the FIRE movement here. So, guys, that's been it for today with Living with Less. If you learned something today, give this video a thumbs up. If you like more content like this and you want more tips on how to save the planet and your wallet, subscribe to our channel and leave us a comment down below if you got affected by GameStop and if they're in your portfolio, and if you had them in your portfolio, I really like, good blessings. I hope you guys made it out, because if you did,
I hope you got out.
Yes, awesome for you guys. So that's been it with Living with Less. Thanks for tuning in. We'll catch you next time.